fire now is closing in. nothing to bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Fire, take my hand, I'll take you higher than you've ever been, than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. And let's take a look at Bitcoin taking a little dumperoo to the 786, possibly the 886 of this impulse to the upside, negating all bullishness as it breaks the point of control and goes lower here on this descending channel, whatever you want to call it. And let's go into the liquidity after this rejection of the mean reversion path to the upside here of the 0.5 into the discount region of this pitch fan we have price trapped in since January. Let's go ahead and take a look at high block capital. Now, what is high block capital? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait or got burnt already. So let's go do that now. So we're losing a lot to Father Time here, but we are seeing a grab at liquidity to the downside here of the 61 million and the other partners in crime that we lost to Father Time, which will go into the 7-day to see, but
fatality.
And we will rest in peace to those brethren of induced longs that were induced here. As it drops into the support levels, you're seeing some inducement of the short, 78 million times 2 for the 100 extras here. Somebody laddering in a short position, so their liquidation point of the short is up here, so they will potentially V-shaped off the divergence they spawn at one point and possibly come back into this region, so look out for that. You have also some pools on the 1 minute time frame. Let's try to isolate this in a little bit more detail. We have 106 million and 50x shorts up at 29,597, and we have that marked off in our charts from before, as well as one we're about to lose to Father Time up at 29,753. So this getting more imbalance to the shorts as we drop down here. Let's expand our vision to the higher time frame pools. Shout out to everyone here. Booyah, booyah. Finally getting some move, something past 29k. Woohoo! Some action. So on the 7-day time frame, which looked even Steven, we got a liquidity grab to the downside, taking out $7 billion here on the longs here. We could go down to the 3 billion at 28.9 and potentially grab that 850 character while we're at it, and that could be enough for a little bit of a bounce to go up to this region. You do have that 28.3 region as well if we decide to stab at the external range. Let's go look at that external range now as we expand our vision to the 1 month time frame. If we look at the 1 month here, you do have the double digits. We already went over this the other day. $50 billion down at the 28k region that they could come back into if they do make a stab down into this region. So it may not be the end. If they come down into this region, they could come down into this and make us stop out all the nice longs that have been consolidating for a time here, this entire range. So coming down to the point of control here on the daily time frame would also be a reaction off the 0.65, 0.66 Fibonacci region and stop out all the longs within this time. How many longs, how much time would that be? Well, that would be about 55 days worth of long liquidity that they could come back to by going to this point here in the charts. So are we going to jump in just here because it's at a Fibonacci level on a deep retrace here at the 886 or the 786? Not necessarily, unless you have a game plan for what if it just goes down below that. So do you have a stop loss in mind? Where are you going to get out? So let's go into the higher time frame and see what we do in the 3 month. We could see a V-shaped back into those 100 extras, but when they reprice, they just ignore them. So if they decide to reprice down to that region, they'll just ignore them and just go ripped right down to the downside. So on the 3 month and the 6 month, we had the imbalance to the downside sub 25k. On the 6 month as well, we're not going to go into the detail of those amounts, but you can see clearly it is in the 180 and 122 billion dollar region down below. You do have 149 up above, so you can't discount it completely. As you go to the 2-year time frame, we do see that the 32k region is looking hot for their picking, up at 198 billion dollars, almost 200 billion at 32.4, 188 billion at 32.8, and 197 billion at 33.2. So approaching that 600 billion dollar mark. 24.4, 241 billion, 132 billion, 24 even, and 203 billion at 23.6. So talk about rock in a hard place. Do you come up to this first or go down to that first? So bouncing off the liquidity at 28k would give you 56 billion on the 2-year chart. So let's go back to the 1 month because it's more ambiguous right now. So let's go to the ambiguous chart to see what we can see. We do have that thick $30 billion up at the 30,005 region, but more double digits down below in that 28k. So if we start to express our intent down below, we could wick into this, and we're here for it either way. We are as flat as a pancake, as we said last live. We are waiting for some confluence to line up. Stars need to align in our favor before we shoot the trade in any direction. So we're waiting for that to occur. So let's go ahead and take a look at the Binance chart and see what type of levels we have. We have the same idea as the Coinbase with the point of control here and the Fibonacci reaction golden pocket region with the deep retrace zone down here. And we got that rejection off the point of control that we were talking about, and that insinuated the move down below. This bearish trend-based fib level has been serving us very well, with the 236 respecting to the 1 level here and getting that second respect down below. So coming down to that 1 level for the second time on this trend-based fib level. Are we going to see the Hail Mary down below at the 1.618 or the 1382 level? That would be nice to see. It lines up with the liquidity quite nicely. Let's go see what the FOMC meeting is going to be about. Let's go ahead and throw on our oscillators while we're here. Boom, heads up display is on. This is how you should potentially use Momentum Master. You could take it off, do your fibs, look at other things, and then use it at a time of your liking. You don't always have to have it on at all times. This is the suite instantiated down at the Bitcoin's bottom. Last live we went over where that bottom exactly was and how I traced it over on price action for 30 hours plus. So this is what these indicators show. The stochastic array, is the stochastic array going to fail us now, or are we going to get a bounce off those 6 and 5s that are appearing so nicely on the charts? So let's go ahead and look at what we can see. The daily time frame getting suppressed here, coming down. This might have something to do with that 3-day cross down event. If you recall, we did talk about that cross down event back in July 21st. We were saying the baselines were crossing down while the price was getting rejected off the 236. We could see a suppression on the 3-day time frame, similar to what we pointed out on April 16th with the baseline cross down event, and 60 days of downside ensued thereafter. So this 3-day cross down event was not to be ignored, and surely enough we did get stabs to the upside, but not sustained, as the suppression was real on the baseline. So what are the baselines, you say? Well, you can read about them. They're your first sign of reversal, one of the few leading moving average formulas you will find on the market. All right, so if we go to the daily time frame, let's go to that right now. Daily time frame suppression coming in, the 3-day stochastic already at an oversold status. Let's go ahead and move lower to the 22. Let's see if there's something inbound for the 22. The 22-hour is getting oversold. It's been a while since we've seen an oversold status like that on the 22. The Williams could come a little bit lower on that. We've been seeing some suppression on the 22 in terms of bullish takeoff. Let's go into the oscillator A. Got the cross down event confirmed, and we've been seeing that suppression on the 22 as well after a previous cross up play. And let's look at the 12-hour. 12-hour closes in 7 hours. We had that suppression of cross down suppression. We were talking about the holding of the cloud and the 6s here. So we had the 6s on the stochastic way with the cloud, and we did take this trade on over the weekend to the upside for 6%, I believe, and then we closed out in profit because we weren't feeling it, and we got stopped in profit. And then we didn't take the short, but we were just sitting on the sidelines because this cross down event is an ambiguous contradiction to the signals. We said we'd like to see the baselines beneath the price. If you look at the indicator here, when we had all of the things together, we had the cloud recaptured, and we had the baselines beneath the price, and that's when we saw this massive upside play. So ideally you want to see the baselines beneath the price in a manner like this, and then you see the reclamation of the cloud, and then the baselines hold alongside that in a trifecta of things, if you will. So having these 3 things in alignment is where you want to see that long play out. Since they were not in alignment, this is why we saw the eventual downside and the rejection of the point of control. All right, so the money flow is coming beneath the RSI here. The Williams could come a little bit lower, And the Williams is factored off of price action. So when I say Williams come lower, it means the price should come lower because it's rated off the price. So getting these 6-hour time frames to hold a 6 level here, this is interesting to note. Are we getting a stop loss hunt, an eventual rise to the upside coming into the meeting in 15 minutes? We have FOMC minutes in 15. So are we going to get some sort of play here on that? It's going to be volatile, so please trade safe. If you are going to enter any type of trading scenario, always use a stop loss and don't over leverage yourself. So the 6-hour time frame had you at hello back here with the cross down event on Thursday, August 10th, and we've seen that steady suppression. We're not yet getting to that zone where we would reclaim the cloud in any way, shape or form just yet. So let's take a look at the lower time frame as we start to go into a lower time frame on the 4-hour. Not seeing any volume on this drop here, so it's interesting. No vector candles, just a sudden drop to the downside. We did have this purple stop hunt vector candle here that we're just seeing a slow sell-off, perhaps of retail positions, since there's no real repricing involved. So it's getting the dead weight, separating the wheat from the chaff as we enter into this idea. So the 4-hour time frame getting oversold here. Williams getting into a nice position. Money flow and RSI at a low value of 32, oversold. Hourly time frame getting some volume on that breakdown there. Attempting to maintain this 29K. There's a battle for 29K occurring as we speak. Williams getting low, not low enough for my liking. I would like to see it round out. We haven't really seen these rounding out of the Williams like I used to see. It's getting more choppy and harder to read on these time frames than it used to be. The sideways price action is just annoying, if I'm being honest. And looking at the 15-minute, you see the bullish divergence that turned into a stop loss hunt on the overbought status and going lower, entering into the FOMC minutes in 15. So as it stands right now, you are getting this suppression of price on the stochastic array. Generally, when you see this 5s and 6s and beyond, we're getting even a 7 here at one time. So that's 7 time frames oversold. So getting into this region, eventually seeing a bounce to the upside. Not really liking the confluence for this, just a 786 and an 886 retrace region of the previous range. So if we go into a 12-hour time frame, looking how the 6 hours going to close, like what is the 6-hour close going to do into the minutes? So this entire region here is about 23 days of consolidation. So this consolidation region, we have yet to reclaim some of these wicks at the 28.7 region. When we came down to this one, we came down to the daily support level at 28.690 and we bounced right off it, but we never actually consolidated down in that region at all. So if we go back to those times where we had that bounce, we were only there for a few minutes. I remember doing it on the live stream, considering at the London close on a Tuesday, Monday into Tuesday, and considering what was going to happen off that daily support structure, and we bounced right out of there. So this BPR, this balanced price range fair value gap, is basically still here. You have not reclaimed anything there in the 28.8 basically. If we come to the 28.8 region, reclaim this fair value gap just beneath the 886, that would be some confluence of something to note if we hold this region or have a reaction and stop out all the liquidity here, and you have this 28.690 support structure that we could be using from the daily support. Let's go ahead and show you what that daily support structure is like. We're going to turn off Momentum Master for a minute here, so we can just show you cleanly where it's bouncing off that level. So here's basically in May 18th, 2022 and May 19th, 2022, we had some candles close right there. We had some wicks, wick, some wick, candle body, close enough down to the 28,600 region, but a lot of consolidation from May of last year was in this region. And if you go back even further, you have in 2020, you have a wick there on that level, a consolidation on December 31st, just before the new year, and December 30th, just before the new year as well. So you had this level and the wick that came down to it on January 4th that is kind of in this region. So this is a daily support region, which is why I have it on my charts. And we had a rejection. If we go forward in time, we had a rejection in March multiple times off that wick. We had a reaction on the daily time frame in April. We had a rejection in May. We broke through it in June, and here we are back to that 28,690 again. Do we come down to it? We reacted off of it again August 7th. Do we come back and have a proper consolidation again, or is that it for it? Just one single wick. Twice we went down into it, one time a little bit below, second time do we recover this entirely? So there's a battle for the maintaining and wanting to shift out of this range, basically on Bitcoin, wanting to come back out from the depths, nether regions of 28K. We came all the way out of this 15K region, and they want to make a stab up at some point. We have all these levels charted for the upside, but the liquidity doesn't suggest anything beyond 33. We went over that $600 billion, so that's 706. If it does come up to it, that's just a pipe dream. You'd need to be above, closing candles above 30,700 for that to occur. So yeah, bullish or bearish or bullish, what's going on? We're holding 29K yet again as we enter the last 9 minutes into the candle close. If we go into the 6-hour time frame, 6 hour, wait, I thought the 6 hour, okay, it closes an hour from now, so we still have an hour and 8 minutes. So basically after the FOMC, you'll see how the 6-hour candle closes. So whatever they do first, if they start to push it real low, they could have a V-shaped out of here. Unfortunately, we will not stay live for the minutes, so we'll just say that the confluence regions, we already went over it. You have 28,799 for a fair value gap over in these two candles here, the BPR that we just went over, and the daily support structure at 28,690. Does that hold or break? If it breaks, you come down to 1382 as a possible reaction level, or the 618 level of this retrace, this impulse to the upside, and possibly this point of control region within this gap here between the 66 at 27.9, basically 28K to 28,152. We're here for it, chilling like a villain on the sidelines, flat as a pancake, waiting for entry of some kind, waiting for some confluence. Not really buying the 786, but that could be just me. I'm not really into a 786 player, but maybe there are some players out there that like the 786 more than the 706 or the 618. I mean, the thing is though, if you just take all analysis out of the window, throw it out the window, and just go with Momentum Master's signals, like the last, it's not even a signal, it's just a indication of more things than the brain can hold, because it's this stochastic array is holding 32 different indicator values across 7 time frames. So you can't really hold that all in your brain. So it's telling you 5 time frames oversold, watch out, and then sure enough, it shot up above to the upside on that play. So when you get that repricing, it just decides to do it. So here we are, we're getting oversold on the indicators, getting those 6 time frames oversold. So are we going to get some push up here? If you just filter out all the noise and just went by this dynamic alert that comes to your phone, you would be able to just possibly, there was a time I back tested this, by the way, and it was 70% accurate to at least put you into profit, where you could set your stop to break even and not worry about it. So that's why it's there. At least you can get something if you're into scalping, perhaps, but we're not going to do that into FOMC. The last time we missed that, it did play out. Let's just put it that way. So FOMC should be interesting. We're getting a 5-minute till candle close buyback wick off of the 786 here. We're at the bottom of the Keltner channel on the hourly time frame. We could make a impulse up to 29,300. If we look at the liquidity here, you have the 100 just filtering everything out and just going back to the liquidity. We have more liquidity in shorts opening up here than longs, so they could be retracing back up to the 78 million that's opened twice here at 29,219 and 29,171. So they could come back to these 100x folks after liquidating some of these larger time frame 50x longs, and then just come up and say what's up to them. So we could shift up to this region and say what's up to the 100x shorts now. So it'd take you to the 200 region, which would take you up to the cloud. So at the bare minimum, we could look like we're coming back to this and see how the reaction off the cloud would be. Do we come down, retrace, and continue higher, or do we just dump the bed at that time? We're just going to leave it minimalistic. I'm frugal in my prediction. Going into a news play, I have no idea what it's going to do, but as it stands right now, it looks like you could be getting this cross up event maintain if this buys back in the next 4 minutes. That is the definition of a bull hammer when it does play out like that. If you stay above the 382, if the body is above the 382, then you are basically, yeah, you're above the 382. So that is the idea of a bullish candle if it maintains that region. So you got the liquidity in the cloud and the super trend, bearish super trend to negate, also equaling those 236, the 786 level of the bearish trend based fib. So if you just ignore all of the things, no confluence at all, just going off the indicator, it would be saying you're going up from here. So just looking at the stochastic array alone, it should go up, but we saw some suppression. We did see that when we took that for this level up here, so there's no reason why it shouldn't react at least a little bit to the upside here. So coming up a little bit to those 100x pools, just ignoring all of the non-confluence. If you're just playing that 786 play, you could get that 786 bounce all the way up into the regions of the 29,522. We never took out that 29,753 character, so we still have that guy to look out for up here potentially. Whoops. This guy would also be the 618 of the entire impulse, although the impulse now changes by bringing it down to here. So that would put you at the 0.66 reaction if we do come up to that region. So if you come up to this region, you can look for a reaction off of the golden pocket of the range. We previously, if you look at this entire impulse, it looks like it's already a 618 rejection. It wasn't a 618 at the time, it was just the range high here, so interesting to note. So do we come back to this range and react off of the 0.66? That could be a interesting thing that could be occurring off this 786 if you just zone into what's happening on the 1 hour here. Already going up by a fair amount here. So yeah, coming back to the 100xers by the looks of it in 1 minute time here as this candle closes going into the minutes. That could have been your entry point if you were into the 786 bounce idea, and you could come all the way up to the 66 level. That would put you at a 2.51% potential increase if it does go up to there. It's only FOMC minutes, so there's not, that may have been the volatility. You never know. I'm not into playing those plays personally, but you could be getting some volatility to come up to this region and take out those shorts. You got a thick band up above after taking some of these guys out. And yeah, we'll keep it short but sweet like that, and we will leave you on that note as we close out the hour. Total is now closing just below the 786 region of the bearish trend-based fibs. Had a reaction the last time, 4 time frames got oversold, so you could be seeing some money get inserted back here based off the minutes. So this was a sell into the news idea, and maybe they're going to buy back as the news reveals itself. And yeah, let's look at the dollar coming up into the 1382 region. You had a rejection the first hit there, and you're coming up for a second hit, potential double top. If we look at that, and this is why trend-based fibs are so amazing, because they actually hit and react there. So they reacted off the 1, came back into the consolidation of the 6.5, came back to the 1382, and the next would be your Hail Mary play up at the 1618 if you're going to be bullish for the dollar. You're getting some vector candle by the looks of it, even though it doesn't display volume in the indicator. So you could be coming up here. You still have a steam on the 4 hour, which is interesting to note. So you could be coming up higher on the dollar yen here, which would cause Bitcoin to go down imaginably. Everything else is bleeding out. You have Tesla bleeding out into the news, Google, Nvidia, Netflix, gold also slightly coming back down. We finally got that hit to the golden pocket region that we were talking about. Getting a rocket on gold. Interesting. Are people going to move out of risk averse into the gold now? Is gold the next thing to enter after everything is said and done off the news? Will they take their profitos and put them into gold? You're getting a rocket ship on gold. We'll come back to that in the future on a future stream. You saw it here first. You got a rocket ship on gold, ladies and gents, that locked in on 4 hours. You did have a false one, but by false you did have it go up at that time by 0.86. If you were trading gold, you'd be rich just playing that small play. So who knows? Could be the stop loss hunt, recovery of the wick, come back down to this 0.65 region for that double bottom idea out. Well, that's my story and I'm sticking to it. Sorry if I didn't have more for you. I can see if you have any questions or coins or anything you'd like me to look at. Let's take a look at that. Yo, what's up, Rainier? Thanks for stopping on in. Well, ladies and gents, as I said before, this is possibly coming up into these shorts. If you are so inclined to take a scalp, you may or may not have taken that off the 786 bounce there. And that's my story and I'm sticking to it. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you